Today's edition of Back Roads of Illinois. This is the Markets Club podcast with Brian Hoops for Midwest Solution for the Fundamentals on the Greens. Then we were joining with Christina vanahn from vanahn and Company and duwany Bussey from Bold Marketing LLC on today's World Supply and Demand Report from the Department of Agriculture. But now with Brian Hoops for Midwest Solution. We were talking about the commodities markets with Brian Hoops for Midwest Solution. Hey, Brian, how are you today?
Good afternoon, Caesar. I'm doing great. I hope you and all of your listeners are doing well as well. And I know you're expanding your podcast. Congratulations on that. That is wonderful news.
Thanks. Thanks, Brian. Let's discuss about these grains prices. What is your thoughts on it?
I'm kind of impressed with how the markets have held up given all the tariff news and the volatility that we've seen across our world, not just here in the United States, but especially the corn market has done well in the last week. We absorbed the tariff news that hit our markets early, and we've since come back much better than what the stock market has or the cattle markets have. I think the trade realizes the corn market does not export a lot of our product, and we are not going to be subject to much of the tariffs against our corn. The vast majority of our corn is fed either through animals here in the United States or through ethanol production, and that leaves about 15% of the total production for the year exported, and the vast majority of that corn exports are sent to Mexico, which has shown a willingness to negotiate these trade agreements and trade tariffs with President Trump. So corn has held in well. Soybeans have done, I think, surprisingly well. Not only the tariff news, because 42% of our soybeans are exported and subject to tariffs, but also we have heard that our Brazil announced for the month of March record exports of soybeans, a new all-time record eclipsing 2023's sales for the month. And they're selling a lot of soybeans right now to China, and that's why China is in no hurry to reach a trade agreement with the United States.
How about the funds and the technical aspects on the grains?
Yeah, looking at a technical chart, the corn market I think has done pretty well. I would say technically we're in downtrending markets for corn, soybeans, and wheat as we enter the planting time frame. But the corn market's more of a sideways pattern. We've rallied off of the tariff news, almost 30 cents now. And so it's more of a sideways pattern. And if, breaking above the March highs for corn, we're a long ways from doing it for soybeans. But if we could get above those March highs, it would turn a lot of the trends higher. And that would usher in some technical buying, some fun related buying. As we go into the month of April here, we're going to start turning our attention towards corn and soybean planting. 3% done planting nationwide in the corn. That will accelerate over the next 2 weeks, really. It's going to take a couple weeks for most of the Midwest to get ground temperatures warm enough before they can even think about getting out into the fields. But any adversity in the springtime frame of April here into May, that could give us another bump in prices because there is some gaps to go back and try and fill higher on the charts. So usually those gaps get filled. It doesn't have to be here the next 2 weeks, but at some time over the next several months, I would expect those gaps to be filled at least.
Any concerns about our grains to China for our farmers in the Midwest?
You know what, the when we saw these tariffs previously, the Trump administration did give some sort of an aid or bailout program to the farmers for lower prices. And I think we are probably going to see something like that again, especially if this would drag on for an extended period of time. The the markets do not like uncertainty. We don't like these concerns, these worries, and I think we'll most likely see some sort of a aid package to help the farmer, to help some small businesses that are negatively impacted by any trade wars or trade conflicts. Of course, a lot of the companies that are manufacturing products outside the United States, they can move production back to the U.S. And avoid the tariffs. The American farmer produces everything here in the United States, but is dependent upon shipping products overseas for their higher prices, and that's why they need to be compensated for this trade war that we're in right now.
Is the MFP payment for next couple weeks? We will see.
Yeah, over the next couple of weeks, I think we're going to see um, probably the corn, soybeans, and wheat to a lesser extent try and work their way higher, uh, anticipating that we will have trade agreements being worked out with some of these countries other than China, and we're going to be into the planning time frame. So we want to put in some premium as an incentive for the farmer to get the crop in the ground on time, uh, especially if there's any weather issues. So I do look for prices try and move steady to higher over the next 2 to 3 weeks into the first part of May. And at that point in time, will be almost fully dependent upon weather in the United States and in Brazil for price direction.
What about the technical side to the livestock markets for right now?
Yeah, you look at the cattle market right now, and the technicals are not real pretty. We are almost mirroring what happens to the stock market to a T. Yesterday, the cattle market had a big rally uh, mid-session along with the stock market, and by the end of the day, cattle had fallen back and closed near their lows as the stock market pulled back off of its highs. This morning, we had a big higher opening in the cattle market because the stock market was sharply higher. But as that stock market faded today, the cattle market faded by the closing bell. So we did have new lows, new low closes for the June live cattle contract. This is the poorest technical close since going back to early part of March. We're eclipsing almost all of the gains that we saw during March and early part of April for the cattle market. I still think the cash markets are not as bad as what this uh, cattle futures are seeing. We're going to see steady, but probably $1 to $2 lower cash trade this week. Um, Longer term, this market is concerned about the economy and the consumer effects on demand because of possibility we go into a recession, possibility of inflationary prices against the consumer, and what it means as far as their demand for beef and uh, and of course our exports. Now our exports will probably improve over time here for beef, but in the near term, the consumer demand in the U.S. is probably going to be stymied, and I think that's why this cattle market is following what happens with the stock market, as it's a sign of the health of the economy.
What is your position on the stock markets for next few weeks with the fundamentals on the cattle markets, Brian?
As far as the stock market goes, we really haven't seen any change to negative fundamentals. So, we still have good unemployment numbers, good CPI numbers, PPI numbers, all these numbers, and we're going to have fresh new numbers here in the next several days. They're all trending positive. We don't see inflation on the horizon. A lot of people want to point to tariffs as causing inflation, and that's not necessarily true. We see energy prices dropping. That's good for the consumer. So there's a lot of positives for the consumer. It's the concerns about what happens with this trade war and for how long it will last that is weighing on the stock market. And so we have some real negative technical action, especially today in the stock market, where we were sharply higher at one point in the session and have since traded sharply lower. Now, we have not taken out Monday's lows yet, and that I think will be pretty important to not to do that as we try and carve out some sort of a bottom. But I think a bottom like this is going to take time to develop. It's not going to happen overnight unless we see an agreement reached with China and some of these other countries right away.
How was the CFTC report from last couple weeks ago?
Well, we are starting to see a little bit of a shift in that report. We've seen the funds, for example, move to a record net short position in soybean meal. This is an all-time uh, record position. So that's certainly a little bit negative. But we've seen the funds peel out of their long positions in corn. They were long over 460,000 contracts at one point in February, less than 200,000 long right now. That's a fairly sizable change in ownership as the commercials have stepped in and become big buyers. We've seen the same pattern in soybeans, although to a lesser extent, where they were strong buyers of soybeans in February and wheat for that matter, and have since turned and sold those markets. So if you're watching the trend of the market, you can probably predict the positions where the funds are going to be in. The trends are lower for the uh, for the technicals for corn and soybeans and wheat, and the funds are pushing those trends as well. The caveat is they're still net long corn, and corn's maybe in more of a sideways pattern than a downward trending market.
Do you have any final thoughts about the commodities markets with trade issue?
Well, I think for the farmer out there, it's going to be a very bumpy, very wild ride here for the near term. Best you can do is manage your risk accordingly. I think we've seen a lot of the bad news priced in as far as the tariffs go, and we'll probably start to hear good news moving forward in the form of trade agreements being reached, and that should open our export markets up. But don't judge how these tariffs are going to affect you within the first week. It takes time to reach agreements. These are tools. The tariffs are a tool in order to reach a new trade agreement. And those trade agreements, I think, will be beneficial for the American farmer longer term.
What about LRP for cattle ranchers?
I don't deal with that, so we don't follow it very closely. I think I've heard it's very expensive this year, so there's a lot of interest in using
There you go.
similar product like put options for cattle, but yeah, we don't follow it very closely at all.
Thanks, Brian.
Thank you. I appreciate being on, Caesar. Thanks again for having me.
Thanks to Brian Hoops for Midwest Solution. Thanks to Christina vanahn and duwany Bussey from Bold Marketing LLC. This been the Markets Club podcast. I'm Cesar Delgado. You have a good day.